ABC Bullion's 360 monthly review. My name is Crystal Thivios and I'm joined once again by our resident precious metals expert, Global General Manager of ABC Bullion, Nick Frappell. Hey Nick, how are you going?
Very well, thanks Crystal.
That's good. I bet you're very well today, given it's your birthday.
Yeah, it's been the busiest birthday I've had in years, it feels like, but hey, you know, whatever, still feel young, so
that's
all good.
And we're here once again to review February 2021.
Yes.
Which has been full of bond market action by the looks of it.
Yeah.
Do you want to expand further?
Yeah, I mean, it really has been like the month of, all focus on the bond market, and even, today, looked like gold prices ticking along, kind of pretty much reflecting what the 10-year yields were doing.
Yeah.
So what we saw in February was a 55 basis point move in the market, yields rising, and that pretty much had an impact on everything. It had an impact on gold, not so much on silver, funnily enough, but we'll get to that.
Yeah.
Obviously, a lot of equity valuations, particularly tech, which has done really badly in the context of that sort of rally in yields. Now, I'm probably going to say write in the written report a little more detail about this, and probably try and put in a couple of charts in this video as well that suggests that, look, on one hand, you don't want to try and step in front of a really big move like that, but at the same time, trying to put into context, there may be other things that, of course it's the big fiscal spend in America that matters, but were there other things that kind of help push that collapse in bond prices along?
Yeah.
Some people think that, it was like some selling in the middle of the curve, duration hedging, various other things that actually just gave it an extra push. But ultimately, it's a reaction to, concerns over just how much bond issuance there is this year. Finally, that's kind of like coming through, as it were, and being reflected in the market. So, but, for the meantime, the yields rallied to about the 0.382 Fibonacci retracement of the big drop in yields, and we sort of interact with a couple of other technical indicators, which kind of suggests that big move has hit some resistance and kind of come back off it. But let's not assume it's over.
Yeah.
So what does that mean for gold? Gold has had a pretty poor time. It's broken through at the end of last week, broke through the monthly cloud support level, which had held briefly. Gold moved higher, and then the second time it didn't hold at all. And what does that mean? I mean, gold sort of dropped through that. That's pretty bearish. I think what we're going to see in the shorter term is we're going to see a retest of that cloud base, about 1760. I think gold will rally up to there. What it does there probably will find resistance. Where are the big support levels? Some people are not going to necessarily like this level, but around about the 1670 to 1690 level, that's where I'd say, okay, really good, sort of level to say, okay, if you're going to choose, there are two reasons for that. One reason is it's a big Fibonacci level, 1691, I think is 0.618 or whatever. Probably get that number wrong, but that's where it is. And then 1670 is round about where the market dithered a bit and made some lows in May, June of last year.
Yeah.
So I think that's a really important band to look at. We may never see it, but if you do, that's I think a good level. I think the wider thing as well is, because gold isn't doing so well in this last month, is just what is it doing in terms of its role? Well, it's come off a few percentage points for sure, but if you look at it in the context of your whole portfolio and your sort of wealth holdings, it's actually doing pretty well compared to some of the really stretched valuations we've seen. So in terms of, as an insurance play, absolutely doing fine. It's not as sort of, high beta as some of the things we've seen affected lately. Just quickly moving on to positioning, we've seen an outflow of about 1.2 million ounces, I think, so far from COMEX futures, and a couple of million ounces from the ETFs. So, and of course, that's going to contrast a little bit with what we see in silver,
Well, moving on to silver.
So silver, silver's doing the right things. It's we had some price action in February that on the very, very big picture, where we've got these targets to $40 to $43 on the upside. February price action did create a downside target down to about 20. Doesn't mean it's going to happen, just like the $40 one isn't cast in stone either. But if you look at where the silver price is holding, it's managing again to stay above the weekly standard line. That's pretty sound looking. So it's chopping around. It's not breaking out. It's not breaking down either.
Yeah.
Comparatively speaking, it's doing well. And you can see that different sentiment if you look at positioning. So COMEX positioning is pretty flattish over the month, just very small reduction, but noise really. And if you look at the ETFs, had a 6 million ounce inflow into silver in February. So of course that disguises a lot of ins and a lot of outs.
Yeah.
But if you just look at it from the what happened during the course of the month, pretty good. So I would say I'm going to sort of mention some support levels in the written report, but I'd say it's still looking intact at the very least, and it was looking pretty good to begin with.
That's great news.
Yeah,
Go silver.
Yes, exactly.
And finally, the Australian dollar.
Well, the Australian dollar backed off really quickly at the end of the month because we had some quite weak Chinese PMI numbers. So, Australia and Chinese economy being so, heavily engaged with each other, that wasn't good for the Aussie. Saying that, the Aussie kind of had gone on a little bit, perhaps, done really well. I think I made a 0.8 print against the US dollar.
Yeah.
So that's a really, really good, strong outcome. It's come off pretty sharply. That partly is also not just a reflection of the Chinese PMI print, but also the fact that the dollar index itself is, it's just grinding higher and doing okay. Interesting with the whole yield issue, because the RBA is, like most other major central banks, is in that kind of QE and yield controlled management sort of play.
Yeah.
So in trying to defend the sort of bond purchasing program they've gone in with all in, as it were, with a $4 billion purchase or proposed purchase. Now that's twice what they would normally do.
Wow.
So, and it's had an effect actually. The Aussie yields dropped, I think the sharpest drop they've had in a day or whatever since, I don't know, whatever, people learned to write. So quite a long time.
Yeah.
So that's, the central bank actually managing to keep that, at bay. I've got to say, in the wider picture, that the bond market is not an easy thing to keep at bay if they're on a tear. So we'll see how that plays out. But certainly they've sort of said, okay, we're, chucking in a lot of resources to try and keep those bond yields low in Australia.
Awesome. Thank you so much, Nick.
Cheers.
Thank you for joining us on your birthday.
Thank you.
Thank you all for tuning in once again. For more from ABC Bullion 360, please follow us on our socials or subscribe to our YouTube channel. Until next time, happy trading at abcbullion.com.au. See you then.